Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin chart, as we have just received a couple of bearish signals, and those are definitely warning signs that Bitcoin could be headed lower. But before we jump into the charts, I do like to start over here taking a look at the BTC options open value, and mainly looking at what options are about to expire at the end of this week. And so if we take a look down here at the weekly options at the expiration date of April 15th, that would be this Friday. Now we're early in the week. Today is only Monday. But we can see that the puts, which are bearish, have a lot more on the line than the calls, which would be your bullish positions. And again, there are $3.4 million on the line for the puts, and the calls only have 100,000. This is very lopsided, and really the key levels to keep an eye on are pretty much going to be the 43,000 strike price, the 42,000 strike price, where we see about 2 million piled up for the put side at the 42,000 strike price. They have around 1 million at around the 43,000, and then at the 41,000 strike price, there is 500,000. And then as far as the call side goes, there is no strike price that stands out to me. At the end of the day, it's really the puts that have all the skin in this particular battle. Now, if we jump over here to the Bitcoin CME chart, and I'm looking at the daily chart, about 2 weeks ago, I had pointed out that we saw this gap up, and we normally see these gaps get filled, which basically just means the price would have to sell off in order to fill this gap between these two candles here. And at the time, these were my two examples of basically where it gapped up and eventually sold off to fill that gap. Well, now we're pretty much 2 weeks later, and we have seen another gap filled with a continuation of a sell-off. And you can see each one of these gaps, once it got filled, the price actually went quite a bit lower than where the actual gap area was. But with that being said, we did end up making a higher low and a higher low on each one of these gap fills in comparison to the price back here. So are we about to see a higher low and a reversal for Bitcoin back up towards a perhaps higher high? Or this could continue to sell off to perhaps this 37.5 level, which would be a pretty strong level of support. But I just really wanted to point out on this chart how these gaps actually get filled. It's something you want to be aware of. While it is not 100% guaranteed that a gap does get filled, it does seem to happen more often than not. Now, let's jump into the weeds over here on the Bitcoin weekly candle chart. And in my previous video, which would have been last Monday, I pointed out that this spinning top candle right here at the top of this move was perhaps a bearish signal, but you would want to wait for confirmation from the close of the current weekly candle. Well, that candle just closed yesterday, being Sunday. Today is Monday, and we got that confirmation. The price did sell off, and it has confirmed that that was a bearish spinning top. And at the end of the day, or at the end of the week in this case, if we drop in our EMA ribbons, the weekly candle that just closed below the EMA ribbons. And when that happens, that too is often a bearish signal. So we got a bearish signal from a spinning top candle, confirmation on the close of the next weekly candle, and that candle also closed below the EMA ribbons. So in essence, there is actually a couple bearish signals that have now been confirmed. And if we look back and check our 6 back here, the last time we got a close below the EMA ribbon, Bitcoin continued to sell off all the way down to around 33,000 at this level here. So now we have to ask the question, is this just a bear trap, or are we actually going to sell back off to, say, around 37,500 or all the way back down to around 33,000? Now, if I drop in my Fibonacci levels, the blue line you see here is a 786 level. That is at 40,600. Bitcoin's price is currently starting to breach that level. If that level is breached, then we're looking back down at around 39.6, which would be the low back here. After that, we're looking at 37.5. which could turn out to be very strong support. However, if that line fails to hold, then we're looking all the way back down here to around 33,000. Technically, it was 32.9, which is where this low came in. After that, then we're back here at the 28.8 level from the previous sell-off. If that level breaches, then we could be looking as low as 23,000. So right now, the key level I'm looking at for the downside is going to be the 786 at 40,600. A weekly candle close below that more than likely indicates we're going lower. And at that point, we could be looking back at, again, 37.5, 33,000, 28.8, or as low as 23,000. Now on the flip side, if this turns out just to be a giant bear trap and we start to see the price move back up, obviously the first level Bitcoin has to breach is the 45.5. That was the resistance we saw back in here. It will more than likely be very strong resistance again. And then above that is the 618 level at 46,700, which Bitcoin did get rejected from. And so that 618 on the Fibonacci level, or the 46,700, would be the next level of resistance after 45.5. From there, then we're looking up at around 51,000, which would be your 50% Fibonacci level, which we saw as pretty strong resistance between about 51,000 and 52,000. But right now, all the signals are really bearish. We had a bearish spinning top confirmed by a weekly candle close that closed below our EMA ribbons. And now, albeit early in the week, there are a lot of warning signs that Bitcoin's price action has turned bearish. Now, with that all being said, if we jump over here to the daily candles for Bitcoin, we again have a bearish signal where Bitcoin has closed below the daily EMA ribbon. So another bearish signal. But with that being said, Bitcoin's price had set a couple higher lows. It set a higher high, and right now, if the price can reverse back towards the top side, we could just have a higher low being set and be looking up at perhaps higher highs. But with the close below the EMA ribbons, which would be a bearish signal and a warning sign that this market is perhaps flipping bearish rather than the trend that was moving up bullish, we need to really keep an eye on that 786 level on the Fibonacci retracement, and again, that's falling in at that 40,600 level, and right now it's being tested. After that, the next real level of support would be 37.5. If I turn on my support and resistance so you guys can eyeball it a little easier, you can see with this big green support level down here between basically 37.5 and around that 33,000 level. Now what the Bitcoin bulls really want to do is flip this red zone right here where the price is currently just below. They want to flip this to green, turn it to support, and to get this price moving back up. Now it's going to obviously run into a ton of resistance up here, but if this current zone that is red can flip to green, the Bitcoin bulls could then be looking at a higher low and maybe a continuation to some higher highs. But currently, all the signals that have been confirmed are towards the bearish signs. So you might consider those signals as a warning to be prepared for more bearish price action on Bitcoin. So I think that pretty much wraps it up. If there are any major changes over here on the charts, I will do an update video. So now would be a good time to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have questions or comments, drop them in the comment section down below. And in closing, remember, never send your money into battle without first doing your recon. See you in the next video.